This week, Bitcoin briefly crossed the famous 69,000 cycle top from 2021. While impressive, no one is really surprised about the price. What's surprising is how fast it gained over $22,000 in a month. In this video, we'll quickly look at what's causing this price surge and why it can keep going up even further. There are a few reasons behind it, so let's begin. Before we begin, I want to say that I'm no expert in Bitcoin. I started investing in the bull market of 2021. I made some money and I lost some money, but what I did was I did not leave this space. I kept learning and kept DCAing into Bitcoin over the last 2 years. To be completely transparent, I haven't bought Bitcoin since it crossed $35,000. I hold about 8% of my net worth in Bitcoin. It's not a lot, but it's significant for me. I just wanted to start by saying that. Now let's get to the topic. Pretty much 2024 began extremely bullish with the US Securities and Exchange Commission approving the launch of several Bitcoin exchange-traded funds. Although it seems like it was a long time ago, it's barely been 2 months. However, this has been a significant event that has caused the markets to rally really hard. As soon as the ETF started trading on Jan 11, the inflows really surprised everybody. Before we look at the numbers, let's look at why the ETF approvals have been a monumental moment for Bitcoin. There are several reasons behind it, but the biggest one is that it has brought legitimacy and credibility to the industry. The long-awaited approval of the Bitcoin ETF by the SEC represents a significant step towards the credibility of Bitcoin as an asset class. The journey towards this approval began as early as 2013 with the Winklevoss brothers application, and it wasn't until a court order in August 23 that the SEC was forced to reconsider these proposals. This led to the approval of 11 spot Bitcoin ETFs in 2024. Generally, this regulatory milestone indicates new levels of acceptance and maturity for Bitcoin. The next reason is that the ETFs make Bitcoin more accessible to a broader audience. The ETFs allow investors to gain exposure to Bitcoin without actually having to hold Bitcoin on their own. Let's be honest, buying and storing Bitcoin is not the simplest process. It's even more complicated if you stay away from exchanges and use cold storage. That's what I do. It is complex, but I highly recommend that. I do not hold any Bitcoin on any exchanges. Everything is in cold storage. But for people who don't want the hassle of all of this and only want exposure to the price movements, the ETFs are the best answer. As you can imagine, it's especially useful for those who are not very tech savvy and still want exposure to Bitcoin. For example, our parents and grandparents would be the ideal audience. The next reason is very closely related. Now that the ETFs are available, it's much easier for institutions to participate as well. This opens the door for institutions investors to enter the Bitcoin space. This is simply because large-scale investors prefer regulated financial products. Basically, now with the ETFs available, a lot of investors are looking at Bitcoin as a new way to diversify their portfolio. So yes, diversification is also another reason. Some other reasons also include that people are now expecting Bitcoin to be a little more stable now with big institutions getting involved. Maybe the wild swings in Bitcoin will become a thing of the past. Now let's get back to the price movement and see what really happened when the ETFs were launched. Basically, all the bullish price predictions came true, but looks like people weren't bullish enough. Within the last 60 days, over 370,000 Bitcoin has been locked up by these new ETFs. Please note that this number is over 750,000 if you include GBTC. The reason we are keeping GBTC separate is because GBTC has existed for over a decade now and was an OTC offering that has now been converted into an ETF. In fact, GBTC fees are so high that it's actually seeing outflows. It's probably people buying other ETFs. Here are the other ETFs currently available to buy with Bitcoin as the underlying asset. The biggest one, as mentioned earlier, is GBTC. This has mostly seen outflows. However, look at IBIT, which is the iShares Bitcoin Trust, which is BlackRock's ETF. The BlackRock ETF was the most anticipated one back in the day when it was filed, and this is what set the whole ETF will be approved narrative in motion. It has already surpassed 10 billion in assets under management. This means they are holding over 180,000 Bitcoin. This has also been the ETF that surpassed 10 billion in such a short amount of time. They are literally setting records with Bitcoin. Next, we have the Fidelity one with 6 billion in assets under management. They are holding over 100,000 Bitcoin as well. And finally, let's look at one more, that is Cathie Wood's ARK-B or the ARK21 shares Bitcoin ETF, holding over 2 billion in assets under management. This also amounts to over 35,000 Bitcoin. The combined spot Bitcoin ETFs also generated a new record daily trading volume of nearly $10 billion this week. Yes, we were all expecting inflows, but this has been extremely high volumes of inflows in such a short amount of time. It's amazing to see what's happening in this space. It looks like customers were just waiting for the Bitcoin ETFs to get approved and they all jumped at once. If you look at the cumulative assets under management for these ETFs, it's been growing pretty fast. fast. If you also want to keep track of these ETFs, check out CoinGlass. As the market continues to evolve, let's see what the real impact of these ETFs is over the long run. The market's been very optimistic and it's been great to see the price rising so fast, but we should all stay cautious. Mainstream adoptions is likely to continue through these ETFs, but for me, I'm always going to buy pure form Bitcoin and hold it on a cold storage. That's what I recommend for everybody. If you want to realize the true potential of Bitcoin and hold it for the right reasons, I highly recommend using a cold storage wallet. The next reason for the price surge is the Bitcoin halving and the 4-year cycle that has played out because of it. Let's go over what the halving is for anybody who doesn't know about it. Bitcoin halving is a fundamental event in the Bitcoin ecosystem designed to control the supply of new Bitcoins entering the market and in turn influence its price. Approximately every 4 years, or after 210,000 blocks have been mined, the reward for a mining block is halved. This mechanism is a deliberate part of Bitcoin's design to simulate diminishing returns similar to mining precious metals where the resources become harder to extract over time. This event is extremely important because of the number of Bitcoin that is coming into circulation. The reduced circulation leads to more scarcity that leads to more demand pressure on the available Bitcoin, potentially driving up the price if demand remains constant or increases. Historically, this has always led to the increase in the price of Bitcoin. The 4-year cycle is just a phenomenon which is tied to the halving event. This cycle is characterized by a pattern of roughly 1 year of bear market followed by a 3-year period that includes a post-halving bull market. A lot of people also measure the 4-year cycle from one halving to the next. The impact of the 4-year cycle on Bitcoin's price can be observed by examining the periods following each halving. If we look at the first cycle, that was the 2012 halving, Bitcoin's price rose from about $13 to $1,100 in the year following the halving before experiencing a significant correction. After the 2016 halving, that is the second cycle, led to a more dramatic bull run with Bitcoin's price climbing from about $650 to $20,000 in December 2017. This was followed by a prolonged bear market throughout 2018. Side note, even during then I knew a lot about Bitcoin, but unfortunately I never bought any. I'm just saying it because I know there are a lot of people out there who are regretting similar decisions. I actually started paying attention to the market in 2020, but even then I did not buy any. I waited until 2021. But anyway, looking at the 2020 halving, the third cycle resulted in a bull market that pushed Bitcoin's price from around 8,800 at the time of the halving to an all-time high of over 64,000 in April 2021. As you know, that was a double top cycle and we touched 69,000 in November 2021 before the massive correction through 2022. As we approach the next halving event, which is in approximately 40 days, the anticipation is building. The reward will drop from 6.25 to 3.125 Bitcoins per block, and if history is any guide, we might see a surge in price yet again. But be cautious, as you know, history doesn't repeat, but it often rhymes. At this point, everybody knows about the Bitcoin halving, so we might see a different outcome this time. The outcome might be different in terms of price or just the time it takes for the price to start surging again. Or maybe the combined effect of the ETFs and the halving event leads to unbelievable prices. Let's wait and watch what happens. Finally, let's talk about another reason for the price surge and why the price might keep going higher. This has everything to do with you, me, and everybody else in the space. It's market sentiment and fear of missing out. Let's just define these terms properly. Market sentiment refers to the overall attitude of investors towards a particular asset, which can be bullish or bearish. FOMO, on the other hand, is an emotional response to the anticipation of potential gains. It's the anxiety that arises from seeing others making profits while not being part of it. This is usually how people get sucked into the market in the first place. It's happened to me, and I know it has happened to you at some point as well. In the context of Bitcoin and crypto, the market sentiment can shift very fast. This is often influenced by news events, influential opinions, and broader economic factors. Positive sentiment in the market sucks in more and more retail investors into the market. If we just look at the past couple of weeks, the Bitcoin Fear and Greed Index, which is a measure of how much interest is in Bitcoin, was at 90. When the price pulled back a little bit, it dropped to 75, which was still in greed territory. Generally, whenever this indicator is flashing extreme greed, I tend to not buy anything. However, it's important to know that during bull markets, this can stay on greed for a very long time. Generally speaking, FOMO plays a big role in the increase in price in Bitcoin. Just remember that these times can also be the riskiest times to be buying Bitcoin. It really depends on how high you see the price going. Anyway, this was all I wanted to share in this video. This was actually my first video fully dedicated to Bitcoin and crypto, and I intend to make more such videos in the future. I hope you liked it, and if there are any suggestions, feel free to drop a comment to tell me what I can do better. You can also tell me what else you want to hear about. There are plenty of topics in this space, and I love to hear from you as well. Till then, keep learning and stay on top of your finances. Until next time.